Okie dokie. I think I'll go ahead and get started. So good morning, everybody. Welcome to Maynard Fisterison's nonprofit education series for the month of October. Today, we will be talking about mastering audit preparation and best practices for success. We will be talking about all of the things that you can help your organization to be ready for your audit and keep that audit on track for all those deadlines that might be coming for that audit. And we're happy to have you here. Few housekeeping items. The session will be recorded. Everyone will be muted, but if you do have questions, feel free to put them in the chat and we will get to them at the end of the webinar. I will be monitoring that and I'll come on at the end and we'll go through some of those questions. I would like to introduce our speaker today, Renee McNutt. Renee is a manager in our accounting and outsourced solutions area. Renee joined Maynard in 2018 and has been specializing in supporting Maynard's nonprofit clients by providing daily accounting support, building annual budgets, and improving their processes and procedures. Renee is local here in Bath, Michigan, where she resides with her husband and son and her golden doodle. So with that, I would like to turn it over to Renee to start her presentation. Thank you, Renee.
Great, thanks, Brandy. Good. 1 second to share my screen. All right. So as Brandy mentioned, I'm Renee, and I'm going to be covering some best practices for our audit preparation today. So today we're going to cover the criteria for an audit, key steps for a successful audit. So we're going to highlight some single audit items, go over some tips and tricks to have a painless audit, and lastly, how can Maynard help through all of this? So one of your first questions might be, when does my organization need an audit? There are 5 main reasons your organization may need one. It could be due to receiving federal grant dollars, requirements from the Attorney General, funding source requirements, board, donor, or bylaw requests, or perhaps financial concerns. For the federal dollar requirements, if your organization has expended $750,000 or more in federal requirement and federal funds in one fiscal year, your organization is required to have a single audit. Next might be the Attorney General or license to solicit requirements. If your organization has contributions between $300,000 to $500,000, a review is required, but greater than $550,000, an audit is required. Both of these ranges exclude government grants, and a great tool to use is Attachment B from the renewal solicitation form from the State of Michigan Department of Attorney General. And I've included a copy of it on the next slide so we can kind of dive into that a little bit deeper. Next, funding source requirements. If a nonprofit organization receives funding from government agencies, private foundations, or other grant-making organizations, those funders may have specific requirements for financial reporting and audits. Many grant agreements specify when audits are necessary, and usually it's based on the amount of funding received. Board, donor, or bylaws request. Nonprofit organizations may choose to conduct audits if their board of directors or major donors request it, or their bylaws state that one is required. It is used as a way to ensure transparency and accountability. Even if not legally required, some nonprofits may opt for audits as best practice to demonstrate good financial stewardship, practice to demonstrate good financials and build trust with board members, and ensure the accuracy and integrity of financial reporting. I have several clients where this is the case. The board just looks to use this as a tool to ensure competence and leadership in the accounting team. And then lastly, financial concerns. If an organization faces financial challenges, has experienced irregularities, or is undergoing major changes, its leadership may choose to have an audit to identify and address financial issues. I have another client whose office manager was caught taking money from the organization, and ever since that event over 10 years ago, the organization has chosen to have an audit done. They have no other reason for that requirement other than simply they just would like to have one done and make sure that's not happening anymore. Here's that screenshot of Attachment B from the Department of Attorney General that was mentioned in the previous slide. This is a great tool to use when determining if an audit is required. And it's important to note that government grants are excluded from the calculation. I had another client this year that historically always needed a review, but saw a large uptick in contributions this year. So we used this form to determine if they needed to spend the extra money on an audit or if a review was still acceptable. The reduction of grant or government grants made all the difference for the client, and they were still able to have a review. So key steps to a successful audit. Great communication and being responsive can make a huge difference on how quickly and easily an audit can go. Be proactive. This goes along with the first bullet point and the remainder ones on the slide. Keep note that difficult accounts from prior year audit or items auditors wanted extra detail on, and provide those at the start of the audit in the coming year. Attend a requested planning meeting and ask for your PBC or provided by client list. This serves as your roadmap for what to gather and to be proactive about gathering the items from that list. Lastly, ask your auditor how they want to receive your files, and if you're not sure how to use the portal they have, then ask. So communication is key. Your audit team, although it may seem threatening, is there to help. Anything you can do to discuss, plan, or go over questions or outstanding items before the start of an audit will help significantly. Set your timeline. If your auditor isn't proactive, reach out to them a few months before your organization's year end, and make sure you're on their schedule. Define the audit dates and when they would like to start receiving documentation. In most cases, the more you can provide ahead of time, the better. And also always keep in mind any federal, state, or grant timeline requirements as well, such as federal agency imposed deadline or 990 deadline. Before the audit begins, it's okay to ask questions to get their opinion on how items on your financial should be presented, such as if a grant should be recognized, if you need to book an accrual, or those items. Most auditors welcome those questions and are happy you asked. I have a few clients where I reach out to the auditors in advance and get their opinion on how they like the information presented in. Every time I've done that, the auditors appreciate me asking. And then when it comes time for the audit, they know what to expect since it's already been discussed. While the audit's going on, be responsive. Do your best to have your calendar open to be available to the auditors and as their questions come up, and to gather their testing items quickly. Answer their emails as promptly as possible, even if it's just responding to a couple of questions and you need to run later with the rest. Any information you can pass along keeps them moving, and this will help the entire process move along a lot quicker. So being proactive. Although prior year's findings should have already been addressed, it's a great idea to go back and review what was discussed at the end of last year's audit and make note of any additional questions the auditors may ask or work papers they may need. Draft your response for any recommendations that were not implemented, and respond to any findings if necessary to document how the issue has been resolved, or prepare a corrective action plan if a known finding still exists. Most auditors will provide internal control documents for you to update. Take some time to make sure they are up to date with with the information representing what was true during the fiscal year. Prepare a month-end and year-end checklist. This is a great tool for multiple reasons. It can help speed up the year-end close, provide timely, accurate financial information for decision-making, and can help identify errors or misclassifications throughout the year. Save your time and saving you time at year-end. It also sets expectation of what tasks can be completed each month. And for those accounts with little activity that are only adjusted at year end, keeping a list of those and reviewing what you did prior years can help set you up for success in here. All of this helps document the organization's review procedures as they relate to proper internal controls as well. Identify any significant changes to your auditors in advance, like have you received significantly more grant revenue? Did a key employee leave the company? Did you change a policy that causes a major change to your financials, such as a new vacation accrual or a pension? These are just a couple of examples of what I've encountered and helped clients with, but there's a multitude of more that could be added to that list. Some important items to consider for your month-end checklist may be bank reconciliations for each account completed timely, accounts receivable aging reviewed and tied back to the balance sheet, and same with accounts payable aging. Have a work paper to tie out grants or dues receivable and grants or dues deferred revenue. Review your fixed assets monthly and make note of any additions or deletions, and keep an active work paper of those items or updated in your fixed asset management software if you do have one. So starting on this slide and over the following two, I have a standard month-end checklist that lists out each balance sheet area and task associated with it. Also note the columns across the top that will help identify who the task was performed by versus reviewed by and the date. These are the columns your auditor will look for in regards to those good internal control procedures. Note that all of them have an item to review the general ledger account for reasonableness, and highlights from this slide is the bank reconciliations are completed and tied back to their respective bank accounts, and the AR aging is tied back to its respective AR/GL account. On this slide, we note property, plant, and equipment. Any additions or disposals are recorded. Review maintenance and expense accounts for possible capitalizable purchases. And then the next big item to touch on is accounts payable, making sure that the AP aging report ties back to the appropriate AP general ledger account. And at year end, make sure proper cutoff procedures are in place, or in other words, make sure expenses related to prior fiscal year are booked as such and paid out in the new fiscal year. On this last side, it shows a standard checklist for accrued expenses and also some revenue and expense analytics. For accrued expenses, watch that voluntary retirement withholding accounts and payroll taxes are up to date and accurate with actual payroll and payment activity. And at year end, make sure payroll is accurately accrued for the last pay period in the fiscal year. For the revenue and expense analytics, review transactions for the month and make sure there are no misclassifications and that all revenue that should be recognized is. Compare these items against the budget and look into any major differences and note what they are made up of. This can help identify key items to discuss with your auditor. So now going back to our key steps to a successful audit. During the planning meeting, there are several important items to discuss with your auditor. The main ones are that you agree on the expectations of the audit, the timing of the audit fieldwork, timing of presentation, or when you expect the audit to be complete, and have your auditors present to your board or finance committee. Go over the provided by client list and ask any questions about new or unexpected items you may have, and discuss the format of work papers your auditor prefers. And lastly, discuss materiality and scope for this fiscal year and any fraud or suspected fraud. So the provided by client list, your PBC list, is your roadmap to all things the auditor may need. It typically stays the same from year to year, so you can always get a jump start on it ahead of time. One recommendation I have is create a folder for the current fiscal year to start placing some common items on the PBC list there. This can help make the list seem a little less daunting when you can immediately cross off several items. Some common items you collect throughout the year are W-2s, your quarterly 941s, your 1099s, board meeting minutes from the start of your fiscal year through the first day of the auditor's fieldwork, a board member list, including full name, title, and contact information, grant agreements, investment statements, overall annual budget, significant contracts, and leases. Alternatively, the last items you should pull are the trial balance, the general ledger, your check register through the data fieldwork, and deposit register through the data fieldwork. This ensures that all adjusting entries that you made while you tied out your balance sheet are reflected on the trial balance and general ledger that is being sent to the auditors. So some single audit highlights. Current requirements are that nonprofits that expend $750,000 or more of federal financial assistance in fiscal year are required to have a single audit completed. When your nonprofit needs one, the first and main items your auditor will ask for is a SEFA, or Schedule of Expenditures of Federal Awards. This is used by your auditors to determine your organization's major programs so they can complete proper testing procedures. To prepare it, recommend using Excel to outline each federal grant, their details including the CFDA number and federal department the grant was received from. This information can usually be found on the grant agreement or notice of award. Additionally, you should include the grant total, the grant period, and how much of the funding has been received throughout the fiscal year end. Make sure to tie out the total expenditures on the SEFA to the revenue recorded in the general ledger. Expenses should equal revenue, making net income $0. Your opening receivable or deferral should agree to the prior year audited SEFA, and you should be able to tie back ending receivable or deferral to federal receivables per the trial balance. Have copies of all grant awards, agreements, and related approved budgets gathered and ready to go. and include audit or monitoring reports from oversight agencies, and prepare a listing of reimbursement requests, including the date requested, amount, and a confirmation number if applicable. So some tips and tricks to speed up your audit. Have all requested schedules and documents completed on the first day of the audit. This makes it so your auditor can show up and get right to work, and they'll be very appreciative of that. Provide anything you can in Excel. Your auditors will love you for this. There is nothing worse than getting a trial balance as a PDF. They also will appreciate the general ledger and any account reconciliation work papers in Excel as well. This helps them with the analyticals they prepare when reviewing your balances. You also could grant your auditor read-only access to your accounting software or other applicable applications such as AP or expense management tools. This allows your auditor to run any additional reports they may need and view supporting documentation if attached to transactions. This also saves you from having to painstakingly go through the AP bill testing that they requested and pull every single invoice for them. So I personally love doing this. Highlight key information on grant agreements and contracts, such as the grant period, the mission or objective of the funding, the CFDA number, your grant amount as a few examples, and gather your 990 requests at the beginning of the audit. Put together your work paper for officers' wages and benefits, generate a list of donors who gave $5,000 or greater, including their names and addresses and amount donated, and review fixed assets, just to name a few. Scan supporting documentation throughout the year to avoid extra time digging through file boxes and filing cabinets. So how can Manor help? We can help in several different ways. From a high level, we can just review the work papers before you send them to the auditors, just as an extra set of eyes. From a high level, we can just review the work papers, or alternatively, we can do all the prep work and let you and your accounting team sit back. Or we often serve as a liaison between you and the auditor, answering most of the accounting questions. And our consulting team can review your organization's current policies and procedures and make recommendations on how to better improve for your audit. And they also can help review the processes currently in place and areas of internal control weaknesses and provide creative solutions on how to remediate those areas as well. So that's all that I had for my presentation. And I can see several chats came through, so we can start answering some of those questions. But if you think of anything after this webinar, my contact information is up on the screen, and you can send me an email as well.
Thank you, Renee. We do have a few questions, so I'm going to go ahead and start with them. The first one, is it best to have your audit team in your physical office, or is remote okay?
Remote is absolutely okay as long as your organization is ready for it. Most audit teams find at this point appreciate at least portions of the audit being remote. If you're finding an abundance of time is being spent scanning in hard copies of things, it may make sense to ask the team to come out just for a day or so to do that source documentation work, or going back to begin that electronic storage to help for future years. That's a huge benefit as well. But that being said, we always like to have time with our clients and to build relationships and make sure we are a resource for other non-item specific questions as well.
Yeah, I think that that's such post-pandemic that everything is still, some are hybrid, some are remote. Some of our clients have gotten rid of their offices, so they're only remote. And so it can be done both ways as long as you're, like Renee said, you're ready for it. So does Manor have a portal for secure file transfers that they use?
Yeah, most firms now do have a secure portal to help organizations of an audit and electronic files. It is much more secure than email, and it is a great way to help track where requested items are or delegate tasks to other team members if you have them and communicate to the audit team.
Great, thank you. Yeah, I think most places do have that now. I know we're trying to get most of our clients switched over to our new portal, so that's been exciting. What kind of help can Manor provide if we have findings in our audits?
Well, we have a team of consultants that can help brainstorm solutions of risks that are identified during the audit process or address controls or oversight issues. utilizing us to help find solutions does not generally impair independence, and we're helping leadership and not making any management decisions.
We had a quick question that I'll answer from a member that just popped up about the portal. So I'll go ahead and answer that. Are you able to have prior year files in the portal? Typically, our portals are more for file transfer, so we don't tend to leave files in there I wouldn't use it as a file saving place, I guess, for years. They might still be in there if they haven't been deleted, but for the most part, it's more for file transfer. Is that correct, Renee, for you too?
Yes.
Next question, how far in advance should we start preparing for an audit?
Oh, that's a great question as well. So it's good to have it in the back of your mind year round. As I mentioned, kind of creating that folder to start saving those common items I always ask for that just kind of happen throughout the year. And aside from that, we recommend starting the prep as you're closing out the year. And, as you're doing the monthly work, go ahead and add your work papers to that, and using like this checklist that shows if it was reviewed and prepared by, is a great tool to throw in that as well for your auditors to see.
Yeah. The next question, I was gonna just make a note first, when Renee talked earlier about how we can help with audit prep. So when we are the accounting solution for a client, we can help with the audit prep. And I think there's some things we can do if we are the auditors, but I don't know the line on that. But if you're, if you are a client of ours, but you get your audit done elsewhere, that is something that we've helped clients with. With that being said, how frequently should an organization rotate auditors?
So it's truly up to the board. CPA firms are required to be unpredictable in their testing and work as well to maintain independence in thought. So there are processes in place within the firm to ensure that things are not overlooked and that professional skepticism is maintained. That being said, if your board does insist, or it is in the bylaws that you rotate, consider the same firm and request a shift in team or audit partner. And this allows the board to feel comfortable with, and the relationship with the firm overall can still be maintained.
Yeah, I have seen it before in bylaws where the one running the shift on the partner on the audit changes every 3 years or something like that, just to get that next set of eyes. One question more, how long after year end should an audit be scheduled, do we think?
So, your 990 is going to be due 5 months after your fiscal year end. So I commonly see the audit, being usually somewhere between month 2 and 3, just because then there's enough time to have the subsequent testing and to make sure your year end's closed out. But then there's also enough time for the audit to get completed and for the tax preparers to have enough time to prepare the audit or prepare the tax return as well.
Yeah. And we do see a lot of audits all over, you can still be a calendar year end and have your audit done in the summer if it works better for your, your board meetings or different things for your organization. We extend a lot of 990s. So it doesn't have to be done during that time, but it's whatever works more for, better for your organization and scheduling. I did get a couple messages of people asking if they would see the copy of the presentation. So in closing, if there's no other questions, we will have the recording of this webinar and the slide deck available tomorrow through email. I had a couple people ask about the checklists to be downloaded. Is that something that we can share, Renee?
Yeah, I have that's just my standard one. I can
that's
put that in the slide deck as well.
Her information's on here if you're looking for that checklist. But with that, thank you, Renee. Great presentation, and thank you for the great information for our clients and prospects to be able to have a very smooth audit process. Thank you all for joining us today. Tomorrow, like I said, we will be emailing out a recording of the presentation. Our contact information will also be in that email. If you have any additional questions, feel free to reach out. Next month, we will be hosting our 9 topics in 90 minutes. This is a fun, fast, CPE focused event where you get 9 tidbits of information that might be able to help you in your daily life. Please keep your eyes peeled for communications regarding that webinar that we're going to have next month. And I hope you all have a great rest of your day. Thank you for attending.